Welcome to my channel. World Scene News. Subscribe to my channel for news updates all around the world. The world's financial markets have been rocked by a staggering $40 trillion loss since 2021, a seismic blow that's sending shockwaves through the global economy and affecting nearly every corner of society. This isn't just a headline or a number on a screen, it's a dramatic shift that's rewriting the rules of global finance and impacting the lives of ordinary people everywhere. This loss isn't just a statistic, it represents the pensions, savings, and investments of millions of families, evaporating in a perfect storm of rising interest rates, persistent inflation, and mounting geopolitical tension. For retirees, young professionals, and families alike, the financial future suddenly feels uncertain, as hard-earned nest eggs shrink and long-term plans are thrown into doubt. At the heart of this turmoil is China, which is strategically pushing for de-dollarization, reducing its reliance on the US dollar and promoting the yuan as a global currency. This bold move is not just about currency, it's about shifting the balance of economic power and challenging the financial dominance the US has held for decades. China's actions are shaking the very foundations of global finance, adding new layers of volatility to already turbulent markets. Investors and institutions worldwide are scrambling to adapt, as uncertainty becomes the new normal and traditional safe havens are called into question. Meanwhile, a dramatic power shift is underway in the automotive sector. China's BYD is overtaking Tesla, not just in sales, but in influence, symbolizing a broader economic rebalancing and the rise of new global champions in technology and manufacturing. BYD's meteoric rise highlights China's growing technological prowess and its ambition to dominate the industries of the future. With massive investments in research, development, and innovation, China is positioning itself as a leader in the next wave of global economic growth. The convergence of a massive market correction, China's strategic pivot, and the disruption of the auto industry signals a world in transition. We are witnessing the early stages of a new era, where old certainties are fading, and new opportunities and risks are emerging. The $40 trillion loss is more than a downturn, it's a symptom of deep, structural change. It's a wake-up call for governments, businesses, and individuals to rethink strategies and adapt to a rapidly shifting landscape. The choices made now, by policymakers, investors, and innovators, will determine the new winners and losers in a rapidly evolving global order. The world is at a crossroads, and the next moves will shape the future for generations to come. For decades, the US dollar has been the backbone of global finance, serving as the world's primary reserve currency and the default medium for international trade and investment. Its dominance has given the United States enormous influence over the global economy, allowing it to set the rules and benefit from what's often called the exorbitant privilege. But China is determined to change that, seeing the dollar's dominance as both a strategic vulnerability and an obstacle to its own ambitions. Beijing's de-dollarization strategy aims to reduce its vulnerability to US sanctions and assert greater economic independence. By lessening its reliance on the dollar, China hopes to shield itself from external pressure and gain more control over its own financial destiny. China is pushing its trading partners, from Russia to Brazil, to settle transactions in yuan, establishing currency swap lines and building alternatives to the SWIFT network. These efforts are designed to create a parallel financial infrastructure that can operate independently of Western control. This isn't just defense, it's an offensive to boost the yuan's global influence and challenge the US-led financial order. By encouraging more countries to use the yuan, China is laying the groundwork for a new era in international finance. As more trade shifts to the yuan, Beijing's power grows, and the dollar's exorbitant privileges threatened. The world is witnessing a gradual but significant shift in the balance of financial power. The result, new risks and volatility in global markets, as investors face a future with multiple currency blocks. This transition could mean more uncertainty, but also new opportunities for countries seeking alternatives to the dollar. The dollar's dominance won't vanish overnight, but the trend is clear. China is leading the world toward a multipolar currency system. The global financial landscape is evolving and nations are preparing for a future where power is more widely distributed. This shift will reshape international trade, investment, and power dynamics, forcing businesses and governments to adapt to a more complex and competitive environment. The era of a single currency king is ending, and a new chapter in global finance is beginning. The global economy is entering uncharted territory, where the rules are being rewritten and the future remains uncertain. The electric vehicle landscape has been dramatically upended. BYD, China's EV powerhouse, has now overtaken Tesla in global sales, marking a seismic shift in the industry's balance of power. This milestone is not just about numbers, it's a testament to years of innovation, ambition, and strategic vision. In late 2023, BYD sold more fully electric vehicles than Tesla, capping off a decade of relentless growth and global expansion. The company's rise has been fueled by a unique blend of government support, aggressive R&D, and a deep understanding of the mass market's needs. BYD's total sales, including plug-in hybrids, soared to over 3 million vehicles, a staggering 62% jump from the previous year. This explosive growth has left competitors scrambling to keep up, as BYD continues to expand its reach into new markets across Asia, Europe, and beyond. While Tesla's growth has slowed, BYD's momentum only accelerated, signaling the arrival of a new industry leader. The company's ability to scale production and adapt quickly has set it apart in a fiercely competitive landscape. BYD's edge? Vertical integration, making its own batteries and components, lets it offer affordable, advanced vehicles to a broad market. This control over its supply chain has allowed BYD to innovate rapidly and keep costs low, making electric mobility accessible to millions. This isn't just a corporate rivalry, it's a profound shift in industrial power from west to east. The global auto industry is witnessing a new era, with China at the forefront of the Green Revolution. BYD's rise is a symbol of China's ambition to lead the Green Revolution and set the pace for 21st century technology. The company's innovations in battery tech and sustainable transport are now shaping the future of mobility worldwide. Once dismissed as a copycat, BYD is now the benchmark, forcing even Tesla to react and adapt. The tables have turned and the world is taking notice of this new standard-bearer. The new sales king marks a pivotal moment in automotive history, redefining what it means to be a leader in the electric vehicle revolution. The rules of the game have changed, and the future of mobility is being rewritten before our eyes. The world is watching a new leader emerge, as BYD's ascent signals not just a victory in sales, but a transformation in the global automotive order. The EV market, especially in China, has become a battleground of relentless price wars. Tesla ignited the conflict in 2022 by slashing prices, forcing rivals like BYD to follow suit. BYD cut prices on models like the Seal sedan, sacrificing margins to defend its market share. The result squeezed profits for all, and a high-stakes contest of financial endurance. Yet, BYD's vertical integration allowed it to weather the storm, reporting an 80% net profit jump in 2023, even as others struggled. Only the most efficient, well-capitalized players can survive this war of attrition. The price war is accelerating market consolidation, pushing weaker competitors to the brink. BYD's scale and supply chain mastery give it a decisive edge. The cost of dominance is high, but BYD is proving it's willing and able to pay it. The EV battlefield is ruthless, and only the strongest will remain. BYD's ambitions stretch far beyond China. It's rapidly becoming a global powerhouse. By 2025, BYD was selling cars in over 100 countries, dwarfing Tesla's international reach. In Brazil, BYD captured a staggering 90% of the EV market, thanks to local manufacturing and tailored products. Southeast Asia and Europe tell a similar story. BYD is outpacing rivals, even overtaking Tesla in European sales. Building factories in places like Hungary, BYD sidesteps tariffs and adapts to local tastes. Its strategy: rapid expansion, deep localization, and a diverse product lineup at multiple price points. Western and Japanese brands once ruled global markets. Now, BYD is proving a Chinese company can win worldwide. The BYD logo is becoming a common sight from Bangkok to São Paulo. A new era of Chinese industrial power is here. In March 2025, BYD unveiled a breakthrough. Its new Blade battery can add nearly 250 miles of range in just 5 minutes. This leap matches the refueling speed of gasoline cars, erasing a key barrier to EV adoption. BYD's 10C charging tech, debuting in premium models, leaves rivals like Tesla and XPeng scrambling to catch up. The market responded instantly. BYD's stock soared, while Tesla's dipped. The battery is the heart of an EV, and BYD's innovation cements its leadership in the industry. This isn't just about convenience, it's about accelerating global EV adoption. BYD's deep expertise and vertical integration are driving the future of transportation. The company isn't just assembling cars, it's defining the next era of mobility. The Tesla-BYD rivalry is a clash of business philosophies and global strategies. Tesla's centralized capital-light model relies on a few gigafactories and a premium lineup, but it's slow to adapt to local markets. BYD, in contrast, invests heavily in global supply chains and local factories, tailoring vehicles to regional needs and avoiding tariffs. This approach is paying off. BYD is outpacing Tesla in Europe, Latin America, and Southeast Asia, where affordability and variety matter most. Tesla's export-heavy model is losing ground as local presence becomes crucial. Even Tesla is starting to adapt, but BYD's head start in localization is hard to match. Two titans, two paths, but BYD's everywhere, for everyone strategy is winning momentum. The future of global leadership is being rewritten. Elevating the yuan is central to China's long-term economic and geopolitical ambitions. By promoting yuan-based trade and building alternatives to Western financial infrastructure, Beijing is chipping away at US dollar dominance. Major partners like Russia and Brazil are increasingly settling in yuan, while China's CIPS system offers a swift alternative. Every transaction in yuan erodes the dollar-centric system, shifting the global financial balance. A more widely used yuan boosts China's influence and lowers borrowing costs for its firms. The rise of the yuan is slow but relentless, a key pillar of China's plan to reshape the global order. The past few years mark a turning point. $40 trillion lost, and the old global order is fading. American financial dominance and Western industrial leadership are under siege from China's strategic moves and BYD's rise. The future of cars is being shaped by Chinese innovation, affordability, and speed. BYD is now the industry's center of gravity. Meanwhile, the future of money is fragmenting. The dollar's reign is no longer absolute as the yuan gains ground. This transition brings new risks and opportunities demanding agility from nations and corporations alike. The stories of market upheaval, de-dollarization, and BYD's triumph are chapters in a new global narrative. Competition is intensifying, alliances are shifting, and new powers are shaping the future. The worlds of money and motoring have changed forever. There's no turning back.